Hey everyone, welcome back to the channel. Bitcoin is a decentralized digital currency created in 2009 by an anonymous entity known as Satoshi Nakamoto. It operates on a peer-to-peer network, allowing secure, transparent transactions without intermediaries like banks. Bitcoin runs on blockchain technology, a public ledger that records every transaction, ensuring immutability and trust. With a capped supply of 21 million coins, Bitcoin is often seen as digital gold, valued for its scarcity and resistance to inflation. It has revolutionized finance, enabling global, borderless payments and inspiring a new era of cryptocurrencies. Despite volatility, Bitcoin remains a symbol of financial innovation and freedom in the digital age. Today, we delve into the top 10 Bitcoin bull runs from its inception to the present, celebrating its remarkable achievement of surpassing $100,000 per coin. Before we dive in, make sure to hit that subscribe button so you don't miss any of our future videos. You ready? Let's do this. In 2010, Bitcoin was essentially alone in the cryptocurrency space. It was the first and only decentralized digital currency at the time, marking the beginning of blockchain technology's journey. The concept of alternative coins, altcoins, and blockchain ecosystems had not yet emerged. The first Bitcoin bull run in 2010 was a pivotal moment in cryptocurrency history, marking Bitcoin's transition from an obscure idea to a promising digital asset. During this period, Bitcoin's price surged from fractions of a cent to around 8 cents, a remarkable increase that caught the attention of early adopters. At this stage, most investors were tech enthusiasts, cryptography hobbyists, and libertarians intrigued by the concept of decentralized money. The mood among these early investors was a mix of excitement, curiosity, and cautious optimism. For many, Bitcoin's bull run validated their belief in the potential of blockchain technology. Forums like Bitcoin Talk buzzed with discussions, as participants marveled at the unprecedented price rise and the possibilities of a decentralized economy. Some viewed Bitcoin as a revolutionary tool to challenge traditional finance, while others saw it as a novel experiment. However, there was also uncertainty and skepticism. The market was incredibly illiquid, with trades often happening in informal ways or through newly established exchanges like Mt. Gox. Concerns about security, adoption, and regulatory scrutiny loomed large. Nonetheless, the small but passionate community celebrated Bitcoin's early successes, laying the foundation for its evolution into a global financial phenomenon. Bitcoin's dominance in 2010 laid the groundwork for the eventual explosion of blockchain-based projects and diverse ecosystems that followed in the years ahead.
In 2011, when Bitcoin first broke the $1 mark, it was a milestone that captured the attention of early adopters and investors. Many felt a mix of excitement and validation, as this moment proved that Bitcoin had real-world value beyond theoretical concepts. Early enthusiasts who believed in Bitcoin's potential as a decentralized currency saw this as the beginning of mainstream recognition. For those who had mined or purchased Bitcoin when it was virtually worthless, the rise to $1 was thrilling and sparked dreams of future gains. However, skepticism lingered among traditional investors and the broader public, who questioned its legitimacy and long-term viability. Despite uncertainties, the $1 breakthrough cultivated optimism within the Bitcoin community, fostering a sense of belonging among those who supported the vision of financial freedom. It was a small but significant step in Bitcoin's journey, laying the foundation for its future bull runs and global adoption. The first triple-digit era in 2013 was a pivotal moment for Bitcoin, marking its leap into wider recognition. Investors were exhilarated as Bitcoin surged from around $13 to $260 in just a few months. Early adopters who had once seen Bitcoin as a niche experiment suddenly found themselves holding an asset with tangible value. The rapid price increase was driven by growing media attention, early signs of adoption, and speculative enthusiasm. However, the rally was also accompanied by anxiety and uncertainty. Many investors grappled with whether to hold on for potential future gains or cash out amidst fears of a bubble. The extreme volatility, including Bitcoin's crash back to around $50 after hitting $260, left investors polarized. While some saw it as a sign of Bitcoin's revolutionary potential, others feared it was a speculative fad. Overall, it was a thrilling yet nerve-wracking period that solidified Bitcoin's identity as a high-risk, high-reward investment.
The second wave of Bitcoin's bull run in November 2013 was marked by euphoria and optimism among investors as Bitcoin surged from around $120 to over $1,150 within months. For many early adopters, this was a moment of validation, proving the digital currency's potential as a revolutionary financial asset. Investors felt a mix of excitement and disbelief as Bitcoin broke into the four-figure range for the first time, drawing significant attention from mainstream media and the broader financial community. Speculation ran high, with many newcomers entering the market, hoping to capitalize on the rapid gains. However, the sharp and dramatic rise also introduced fear and uncertainty. Concerns about a bubble emerged, particularly as regulatory crackdowns loomed in China and exchanges faced scrutiny. Despite this, the rally cemented Bitcoin's reputation as a high-risk, high-reward asset, attracting tech-savvy visionaries and adventurous investors eager to shape the future of money. The Bitcoin mania of 2017 was a watershed moment for cryptocurrency, capturing global attention as Bitcoin skyrocketed from around $1,000 in January to nearly $20,000 in December. Investors experienced a mix of euphoria, FOMO, fear of missing out, and speculation frenzy. For early adopters and longtime holders, it was a vindication of Bitcoin's potential, turning modest investments into life-changing wealth. Newcomers rushed in, driven by media hype and promises of quick riches, often with little understanding of blockchain technology. Social media buzz and celebrity endorsements fueled excitement, making Bitcoin a dinner table topic. However, the rapid price increases also led to anxiety and unease, as the market's volatility saw massive daily swings. Latecomers, buying near the peak, often faced heartbreak when prices began to tumble. While many saw Bitcoin as the future of money, others feared it was a bubble. The 2017 mania left a lasting imprint on global financial consciousness.
The COVID-19 pandemic triggered massive economic uncertainty in 2020, leading to a global market crash in March. However, as governments implemented unprecedented fiscal and monetary policies, including stimulus packages and low interest rates, markets began to recover. For investors, the pandemic initially sparked fear, with stock markets plunging, but soon, many saw opportunities in distressed assets and alternative investments like Bitcoin. With central banks printing money, inflation fears grew, pushing investors to seek assets that could hedge against currency devaluation, such as Bitcoin. Bitcoin's price surged from around $4,000 in March 2020 to over $29,000 by December. Institutional interest, including Bitcoin investments from companies like MicroStrategy and PayPal's crypto integration, fueled confidence. While retail investors feared market instability, institutional investors saw Bitcoin as a store of value and a digital alternative to traditional assets. Overall, 2020 marked a pivotal year for Bitcoin as it gained legitimacy among investors seeking safe haven assets. The first peak of Bitcoin in 2021. The first peak of Bitcoin in 2021, where it soared from around $29,000 in January to nearly $65,000 in April, was marked by unprecedented excitement and euphoria among investors. Fueled by growing institutional interest, including Tesla's $1.5 billion purchase and the launch of Bitcoin ETFs, many saw it as a sign of mainstream adoption. Retail investors, driven by FOMO, flooded into the market, propelling prices to new highs. The mood was overwhelmingly optimistic, with Bitcoin being seen as a hedge against inflation and a store of value akin to digital gold. The surge was further amplified by a booming interest in decentralized finance, DeFi, and non-fungible tokens, NFTs. However, despite the optimism, some experienced anxiety about Bitcoin's volatility and the sustainability of the rally, especially after the sharp pullback that followed. Overall, it was a thrilling yet uncertain time for both new and seasoned investors.
The second peak of Bitcoin, in 2021. Bitcoin's second peak in 2021, which saw the price rise from around $29,800 in July to an all-time high of nearly $69,000 in November, was fueled by a combination of factors, including increasing institutional adoption, heightened retail interest, and growing mainstream recognition. Investors were excited as the cryptocurrency gained wider acceptance, with major companies like Tesla and Square announcing Bitcoin purchases and financial institutions integrating it into their services. This surge was also boosted by the approval of Bitcoin ETFs, allowing easier access to Bitcoin for traditional investors. For many, the bull run felt like a confirmation of Bitcoin's legitimacy as a store of value. Retail investors driven by FOMO poured in, while institutional investors saw Bitcoin as a hedge against inflation. The mood was euphoric, with many believing that Bitcoin would continue to rise exponentially, though others remained cautious of a potential market correction. Post-2022 crash recovery in 2023. Following the 2022 crash, Bitcoin's recovery in 2023 was met with cautious optimism among investors. The dramatic drop in value, driven by regulatory uncertainties, macroeconomic pressures, and the collapse of major crypto firms, left many uncertain about Bitcoin's future. However, as 2023 unfolded, signs of recovery began to emerge. Institutional investors such as MicroStrategy and Tesla continued to hold or increase their Bitcoin positions, signaling confidence. Increased regulatory clarity in major markets such as the US also reassured investors. Furthermore, Bitcoin's role as a hedge against inflation and economic instability gained prominence amid global financial turbulence. The price surged from around $16,000 in early 2023 to over $35,000 by October, reigniting interest. Investors, still mindful of Bitcoin's volatility, were cautiously optimistic, viewing the recovery as a sign of resilience. Many saw it as a long-term investment, believing that Bitcoin's fundamental value remained intact despite short-term setbacks.
Bitcoin reached $100,000 celebration. As of December 9, 2024, Bitcoin's price has surpassed $100,000, reaching an all-time high of $103,853 last week before slightly retreating to around $98,585. This surge is attributed to several factors, including President-elect Donald Trump's election promises to make America the crypto capital of the planet, and his nomination of crypto advocate Paul Atkins to lead the SEC. Investor sentiment is notably positive, with both institutional and retail investors showing increased interest in Bitcoin. The anticipation of Bitcoin ETFs attracting institutional investors and the possibility of the U.S. adopting Bitcoin as a reserve currency are contributing to this optimism. However, experts caution about potential risks, including geopolitical tensions and technological challenges that could impact Bitcoin's value.
Closing remarks. The celebration of Bitcoin reaching the $100,000 mark in 2024 represents a significant milestone in its journey toward mainstream adoption. This achievement underscores the growing acceptance of Bitcoin as a digital asset, often referred to as digital gold. The surge in price is fueled by increased institutional interest, the potential for regulatory clarity, and the widespread belief that Bitcoin can hedge against inflation and act as a store of value in an uncertain global economy. The anticipation surrounding Bitcoin ETFs and its potential integration into global financial systems has further fueled optimism. Looking ahead, the future of Bitcoin seems promising, with continued interest from investors, both retail and institutional. However, the cryptocurrency's volatility remains a challenge, with market fluctuations driven by geopolitical tensions, technological advancements, and regulatory developments. While Bitcoin's role as a financial asset and alternative investment becomes clearer, it is crucial to consider the risks involved. If you're considering it, Bitcoin could be a valuable long-term investment, but it's important to balance your portfolio with traditional assets. It is advisable to approach Bitcoin with caution, understanding its speculative nature, and to invest only what you can afford to lose. As with any investment, thorough research and a clear strategy are essential. That's it for now, friends. If you enjoyed this video, don't forget to give it a thumbs up, share it with your friends, and subscribe to our channel.